Imagine investing $1,000 in Qualcomm back in 2018. How much do you think that investment would be worth today, in 2024? It's a thought-provoking question, isn't it? It takes us on a journey of possibilities, opportunities, and the profound impact of making strategic investment decisions. By March 2024, your Qualcomm investment would have grown to $2,927, a 193% increase, or an annualized return of 24%. Now, let's unravel why. Qualcomm's revenue in 2023 stood at $35.8 billion, marking a compound annual growth rate, CAGR, of 10% from 2018. The journey to this figure was punctuated by a series of ups and downs. From 2018 to 2019, Qualcomm enjoyed an 8% growth in revenue. However, the following year saw a slight dip of 3%, but Qualcomm swiftly bounced back, with a whopping 43% growth between 2020 and 2021, and a 32% increase in the subsequent year. The year 2023 was marked by a 19% decrease, yet the overall growth trajectory was unmistakably upward. Delving deeper into the revenue composition, we see that the lion's share, 63%, came from handsets. Automotive and licensing contributed 5% and 15% respectively, while IoT accounted for 17% of the revenue. In terms of geography, China was the leading contributor with 62% of the total revenue. Vietnam followed at a distant second with 13%, South Korea with 9%, and the United States at 4%. The remaining 12% was garnered from other foreign markets. While Qualcomm experienced varied growth rates overall, it expanded its revenue base significantly over the years. Each year brought new challenges and opportunities, and Qualcomm proved its resilience by maintaining a steady growth trajectory. This analysis of Qualcomm's revenue paints a picture of a dynamic, robust company, capable of weathering storms and seizing opportunities. In 2023, Qualcomm's gross profit margin was 56%, slightly below its 5-year average of 58%. This dip can be attributed to increased competition, leading to a reduction in the prices of products sold in the market. However, Qualcomm's net profit margin was 20%, again a bit lower than the 5-year average of 23%. This decrease was due to escalating research and development costs aimed at enhancing competitiveness in the industry. Now let's delve into Qualcomm's cost structure. Beyond the cost of revenue, the two significant expenses as a percentage of revenue in 2023 were research and development, accounting for 25%, and sales, general, and administrative expenses, representing 7%. Interestingly, these costs have been on a downward trend since 2018, indicating Qualcomm's effective cost management strategies. The considerable investment in research and development is a positive sign. It shows that Qualcomm is focused on maintaining its competitive edge in the industry, which is crucial in the fast-paced world of technology. Thus, despite a slightly lower gross profit margin, Qualcomm has been successful in managing its costs, contributing to a healthy net profit margin. This is a clear demonstration of the company's financial strength and its ability to navigate the competitive landscape, making it an appealing prospect for investors. Qualcomm's net profit in 2023 was $7.2 billion, growing at a compound annual growth rate of 8% since 2018. This growth trend was not a steady climb, however. The peak of net profit was in 2022, at $12.9 billion. The challenge for Qualcomm now is to boost revenue in order to increase net profit. Moving on to assets, in 2023, Qualcomm's total assets amounted to $51 billion, a slight increase from $49 billion in 2022. Net assets in 2023 stood at $21.6 billion, up from $18 billion in the previous year. This suggests steady growth in the company's asset base over time. Furthermore, the equity to total assets ratio in 2023 was 42%, higher than the 37% in 2022. This shows an improvement in Qualcomm's capital structure, indicating the company is relying less on debt and more on equity for financing its assets. In summary, Qualcomm has demonstrated a steady growth in net profit and assets over the years. While there have been fluctuations, the overall trend is positive, showing Qualcomm's ability to generate value for its shareholders. It will be interesting to watch how Qualcomm navigates the challenges and opportunities that lie ahead, and how this will impact its profit and asset growth in the future. Qualcomm's steady growth in net profit and assets demonstrates its ability to generate shareholder value. Qualcomm's 2023 current ratio of 2.34, up from 1.74 in 2022, indicates a strong liquidity position. This ratio is a key indicator of the company's ability to meet its short-term obligations using its short-term assets. A ratio over 2 generally suggests the company is well positioned to pay off its debts as they come due. Yet, the current ratio isn't the whole story. It's also crucial to consider the quick ratio, which excludes inventory from current assets. In 2023, Qualcomm's quick ratio was 1.68, up from 1.21 in 2022. This increase suggests an improvement in the company's liquidity position, demonstrating the firm's capacity to cover its immediate liabilities even without selling inventory. Now, let's shift gears to efficiency. We're looking at inventory days, which is the average time inventory is held before it's sold. In 2023, Qualcomm's inventory days was 146, up from 124 in 2022. This increase could be a potential concern as it might indicate slower sales or overstocking. However, receivable days, the average time it takes to collect payment after a sale, were stable at 45 days in 2023 compared to 46 in 2022. This stability shows that Qualcomm has maintained consistent collections from its customers. Despite a slight increase in inventory days, Qualcomm maintains a healthy liquidity and efficiency position. In 2023, Qualcomm's operating cash flow was $11.3 billion, reflecting a compound annual growth rate of 24% from 2018. This impressive growth rate is a testament to Qualcomm's strong operational performance and ability to generate cash from its core business operations. But let's not stop there. Let's take a look at the company's free cash flow. Free cash flow is the cash a company generates after accounting for cash outflows to support operations and maintain its capital assets. In 2023, Qualcomm's free cash flow was $9.8 billion. This reflects a compound annual growth rate of 26% from 2018. Despite a decline in net profit in 2023, Qualcomm was able to maintain a healthy free cash flow growth rate. This indicates a strong ability to generate enough cash to satisfy debt obligations, pay dividends, and invest in new opportunities without relying on external financing. Now let's delve deeper and perform a DuPont analysis to explain the return on equity or ROE. The DuPont analysis breaks down ROE into 3 components: net profit margin, asset turnover, and financial leverage. In 2023, Qualcomm's ROE was 33%, the net profit margin was 20%, the asset turnover was 0.72, and the financial leverage was 2.36. This shows that Qualcomm has been efficient in using its assets to generate earnings and has a moderate level of financial leverage. Comparatively, in 2022, Qualcomm's ROE was a whopping 72% with a net profit margin of 29%, an asset turnover of 1.8, and a financial leverage of 2.72. This year-over-year decrease in ROE can be attributed to the lower net profit margin and asset turnover. Even with a dip in net profit in 2023, Qualcomm demonstrated positive growth in operating and free cash flows, contributing to a solid ROE. To recap, Qualcomm has shown impressive revenue and profit growth, effective cost management, and strong liquidity. The company's revenue has grown at a compound annual growth rate of 10% since 2018, thanks to key revenue generators like handsets and IoT. Despite facing competition, Qualcomm has managed to maintain a stable gross profit margin, reflecting its ability to control costs. The company's net profit, although lower than the peak in 2022, has been growing consistently, demonstrating its capacity to generate profits. Moreover, Qualcomm's liquidity position is robust, as reflected in its current and quick ratios. The increasing operating and free cash flows further underscore the company's strong financial health. The DuPont analysis reveals that Qualcomm's return on equity is driven by its net profit margin, asset turnover, and asset-to-equity ratio. Remember to subscribe for more insightful analysis and feel free to comment on which companies you'd like us to analyze next. Stay tuned.